You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, if you're like me, you probably could use some improvement in your investing abilities, in your investing results. I've done well, but there's been times where I haven't done that well. The person you're about to hear from, well, he learned how to do it from his wealthy clients and helped his clients become even wealthier. His name's Jaden Sterling. Take a look at sterlingstockpicker.com. That's the site. Jaden, it's great to have you on as a first-time guest on FSN. So how do you get rich in the market?
Good question, Kerry. Well, first of all, thank you so much for having me on your show. Very grateful to be here and with your audience. Great question. How do you get rich in the market? Well, in this market, you avoid the disasters. That's the first thing. And you hedge your portfolio with hard assets, gold and silver, my friend, gold and silver. This is a time, I know we keep talking about this unprecedented time, but as this evolves, this endemic evolves, we end up finding ourselves in a time that we have to navigate it differently than we have in the past. Just this morning, the Fed announced that they may increase interest rates at a faster rate. Since 2000, we've been blessed with these very low incremental increase in interest rates, 25 basis points. Now they're saying this year alone, there could be an additional 2.5 percentage points increase. So the market hasn't factored that in. And when the market doesn't factor in a big event like that, that calls for a lot more volatility and a lot more declines. Now, January, February were tough this year. March, we had a bit of a rally, but net markets are down this year. And it's interesting to watch the equity markets in the light of everything that's happening. So first thing I would say to people is shift your strategy away from what you've been told to buy. In the past, everyone owns mutual funds. They've been told to buy mutual funds. There's certain reasons for that some are true and some are not. They're told that diversification is key. It's not. Diversification is a tax, and this is a quote from Warren Buffett, is a tax that investors pay when they don't know what they're doing. So we focus, right? What's that?
I like that. Peter Lynch called it diversification when companies do it, when they go away from their traditional areas of expertise and they start adding companies they know nothing about. One of the things I've seen in my experience in the market, Jaden, is like these spinoffs do unbelievably well because they're part of a whole conglomerate, whatever, and then they get split off and they can really focus on their knitting and really make profits go up. So, but you're looking more at technical aspects of the market, I assume, and the stocks involved.
Exactly. Just like numbers, charts don't lie. And we look at the technical indicators, they can tell an entire story on whether it's time to buy, sell, hold, or avoid a stock. And, it's simple, right? When a stock is trading above its short-term technical indicators, which I view as the SMA, simple moving average, and the EMA, we don't have to get too complicated on the show, but just to show that a stock then has support rather than resistance. So there's some very simple, practical things that investors can do right now and look at in terms of how to build a portfolio and navigate this environment. One way that I think is easy for an investor to do is start looking at grocery store stocks, companies that we know that inflation is rampant. We know that the prices, every time you go to the grocery store, I don't know about you, but whenever we go, the prices are increasing each and every week. It's alarming. So who's getting the lion's share of that money? It's the actual grocery store. It's not the farmer. It's not the producer. It's the grocer. So start looking at companies that can assist with, as rising prices go up. But also, this is a time to be buying two commodities that have not really gone up that much in the past year is gold and silver, hard assets. And I'm a huge fan of both. Gold is only up 6% in the previous 12 months. Silver's up 9%. So they've been suppressed. The prices have been really held down. So I think now is the time to start looking at investing. And I'm talking the actual coins themselves, not the mutual funds or anything else or ETFs. I'm talking the actual physicality of the gold and silver that may prove helpful down the road in the middle of this change. As many governments are talking about a centralized bank digital currency. Whenever in the previous 500 years, when a currency has been reset, it's been reset against the gold standard. And when that happens, at that moment, gold is no longer suppressed. It has to mark to the market at a fair evaluation. It may be 20,000 an ounce, it may be 40, it could even be 100,000. But in that, since this is the financial survival network, when we're talking about how to survive financially, but also thrive, in that opportunity is a time when gold is marked to the market. My suggestion is you cash that gold in, pay off any type of a mortgage that you may have, any type of loans or debt. You want to enter this time completely debt-free to the best of your ability. That way you're not beholden to a system that you may or may not want to be a part of, if you know what I'm saying.
Okay, so this is the Jim Rickards thesis, basically, that in the final analysis, central banks will have to mark their currencies or mark gold to their currencies.
Correct.
Effectively. And we know that there's a zillion times more currency out there than there was, but there's always questions of, is it M1? Is it M2? Is it M2 plus 3? Or is it the monetary base? What gets marked to market? Because historically, when you had time deposits, if you will, meaning you can't not just write a check to it, but it's 90 days, that was not considered part of the money supply, if you will.
That's right.
Nowadays, so that would include bonds as well. So when you look at the money supply in the U.S. in particular, those numbers are well publicized. What does gold get marked up to?
I think it gets marked. That's a great question. That's the $1 million question right there, because what we're going to see is a currency devalue because it's been devaluing for the last 100 years. It's really only it's lost 96% of its value, the US dollar and the Canadian dollar. So when you look at a system that is no longer working or functioning, and they're bringing in an entirely new system, that centralized bank digital currency, we don't know. No one really knows what that's going to be marked to. It's a great question.
And so would they bring in this digital dollar? I mean, we have it already, but
yes.
We're talking about a crypto kind of currency where basically they can just create money on a whim.
That's right.
And they don't even have to think about it anymore. It's not like it's going to be Bitcoin where the total number of coins is capped at 21 million. We got 19 million now. What does it get valued at? And what about cryptos? Do they get revalued too?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
It's interesting. I think cryptos, because, so yes, the whole idea is get everything on the blockchain and centralize government controlled. So we're looking at and then you've got these outliers over here, which are Bitcoin, Ethereum, some of the other, a lot of cryptos that are performing well. Hopefully those will continue. We're up here in Canada and we just had a situation where the government went in and froze people's cryptocurrency accounts based on their protesting and such. In Ottawa, you saw that. So that is problematic going forward too. That's how we have to look at this situation to survive this time and figure out how to best navigate it. So keep your crypto obviously in a hard wallet, right? You want to keep it off the internet. You don't want to keep it holding on with the company that you buy it through. You want to keep it in your own. And then we just have to see what gets announced for our new digital currency going forward. But in the meantime, what I know to be true and feel very confidently about, the stock market will continue because it's how the elite pad each other's pockets and pay each other back. So that mechanism will continue. What people want to avoid, though, are any type of mutual funds or assets that have bonds in them, very important. And because, as you know, as interest rates go up, the values go down. It's called an inverse relationship, right? That could be very problematic for people's portfolios. Most people have them in their portfolios. If your mutual fund says balanced in it, or a bond fund or fixed income, you've got bonds in your portfolio. And all of them are going to be under pressure as interest rates continue to go up, whether it's a tax-free bond or a corporate bond. It doesn't matter what type of fixed income instrument it is. So the second thing is to get out of emerging market funds. It was a big thing in the early 2000s of telling investors, oh, you need to buy, you need to have it's a world economy, get your money in these emerging market funds. And my recommendation now is just invest in your own backyard. If you live in US, buy US companies. If you live in Canada, buy US and Canadian companies. Wherever you live in the world, start investing in your own country, because it's too difficult now to navigate what's true news and what's fake and what's going on around the world. We know the narrative is very in alignment with a challenging time ahead. Let's face it.
Yeah, definitely a challenging time ahead, harder to make money. This is the time where you're more concerned about return of capital than return on capital, or return of investment rather than return on investment, ROI.
That's right.
So do we look at defensive stocks?
Yeah.
Consumer stocks, defense industry, those types of stocks?
I think you can. I think you can look at mining companies, energy companies have done very well in the last year, will continue to. And also physicality of the gold and silver on hand. Coins, I recommend coins. People say, oh, it's as long as it's silver, it's yes. But if it has a face value, a face amount, then it's worth at least that, right? Depending on what happens in the economy. And in terms of investing, you can look at defense companies are doing well. Grocery store chains, you'll find if it's the same in Canada, US as in Canada, I think it is because I'm from the US. They're conglomerates. Many own many other grocery stores. So it's just kind of doing your research a little bit and asking yourself, okay, in light of these rising prices, what will continue to go up in value? Where's the, and I'm talking true value, right? Certain industries I would stay away from. Even though the automotive industry has been super hot with increases 12%, we hear these numbers, 12% in new prices for cars, 40% on used cars. But if they don't have the product to sell, they're not going to have sales.
Right.
So that's right, with all the chip challenges going forward, and they can't get the computer chips, and the narrative goes on. And I think this is a time, I call this time circle the wagons, basically. Circle the wagons.
So that's the time where, so we look at consumer stocks because people are going to buy their razor blades no matter what.
Bingo.
Their deodorant and their cosmetics. I mean, even though that's maybe a little more of a luxury good, but yet we know from past recessions, depressions, that cosmetic sales are considered necessities, things like that. So, right? I mean, that's what we're looking at. What about? Yeah.
Mortgage lenders, those stocks have performed very well over the last year or so. I think they'll continue to as equity, as the real estate market continues to go up. Lenders are lending more and more money, earning more money as interest rates go up as well. So yeah, you've got it bang on. Consumer durables, utilities too. The last thing someone's going to do is stop paying their utility bill.
Yeah.
So if someone is interested in conservative dividend income, dividends are key right now too. I think I always turn to the dividend aristocrats in the US and Canada. The requirements are a bit more stringent in the US, but these are companies that have increased their dividend each and every year for 25 years. These are and as we know, stocks trade in line with their dividends. So even if an investor doesn't need the dividend income, they can simply reinvest it right back into it. And then they're compounding their growth. Super important.
All right. So, I think we've got a good insight into where we need to be heading. So if somebody's interested in your service, how does it work?
Yeah, they're welcome to grab a 14-day free trial at sterlingstockpicker.com. I'm in there every single week, every Monday at 12:30 Mountain Time, broadcasting what I'm seeing going on in the market and what I recommend to do. And if they want to stay with it, it's only $33 a month going forward, and they're welcome to stay in as long as they'd like.
All right. Okay, so the site is sterlingstockpicker.com. And look, if you want to get in touch with Jaden, you can always send us an email. We'll get you an answer, kl@kerrylutz.com. Don't forget our newsletter at the website, financialsurvivalnetwork.com. Jaden, I think we'll be talking a lot more in the future. Appreciate
Look forward to it.
Bye. And hey, we'll see how this market unfolds in the next 60, 90, 120 days. I think it's going to be pivotal.
I think so too. It's good talking with you, Kerry.
And you too. Thanks so much. All, again, if you got a question for Jaden or anything else, kl@kerrylutz.com. Jaden, thanks so much.
My pleasure.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.